We are live on Treasury Talks with Jaime Leverton, CEO of ReserveOne, and Sebastian Bea, Chief Investment Officer and President of ReserveOne. Also, Sean Ristow with us. Avi might be joining later. Brian Rothenberg, our esteemed community guest, is not here today, so you're stuck with us. But there's a lot to talk about. So, Jaime, Sebastian, welcome to the show.
Thank you so much for having us. It's great to be here.
Excited to be here, man.
Yeah. So there's a lot with Trump speaking today. We are just talking about, the leverage wipeout last Friday. You guys, I think, bring a really good perspective that we want the audience, we want people on Twitter, on YouTube to know about is institutional backgrounds. So Jaime, you were former CEO of HUD 8 and you're on the board of Riot Platforms. You had I think a fascinating startup that you're working with. And maybe it's not a startup, but a Bitcoin company that's a miner in Canada. Sebastian, yourself, you come from like Coinbase Asset Management, so a ton of institutional experience there, as well as like working on the traditional finance side. So would love to give a little intro, or for you guys to give a little intro about what you're doing at ReserveOne. And then if you don't mind, before we go too deep into what ReserveOne's product is, we'd love to talk about just this week a little bit to set the stage, like understanding, what's going through your heads as people that have, are veterans that have seen a lot of stuff throughout, Bitcoin cycles.
That's about 5 questions in one. So why don't I start with just who we are at ReserveOne. For those of you that haven't been following us on socials, please do. We announced our business combination agreement and the raise of a $750 million pipe back in the spring. And a couple of weeks ago, we announced the confidential filing of our S4. So we are going through the process of working to get the deal approved, at which time we would start trading under our new ticker, which is anticipated to be RONE, short for ReserveOne, obviously. We are technically a digital asset treasury firm, but really, really differentiated from anything else we've seen in the space. We're inspired by what we've seen from the federal government as far as the support of Bitcoin and their intention to support certain other tokens in the digital asset stockpile. So we expect to allocate about 80% of our funding to Bitcoin, 20% to the tokens that we understand will be in the stockpile. So a mix of Ethereum, Solana, ADA, and XRP. And then we also, we are not a passive strategy. We will actively look to generate returns from the assets while we hold them on our balance sheet. And we also have embedded optionality to allocate up to 10% of our AUM into high conviction venture opportunities. So all in all, just really a different type of company that gives a broader base of exposure to the industry as a whole. And I will turn it over to Sebastian, who is in charge of generating our returns.
Sure. Thanks, Jaime. And Jody, I think to your question, maybe even just to wrap a bow on it, the way I think about what we're doing here is we're building a company to own the upgrade of financial services here in the U.S., right? Because if you look at the liquid portfolio, Bitcoin, Ethereum, Solana, XRP, and Cardano, at least initially, and then the venture portfolio. When you back up in your client, say you're an advisor and you got a bunch of clients who just want to do one thing in crypto and try to have exposure to the entire space. We're building a unique solution for that problem, right? Traditional investors don't buy generally single asset ETFs, right? They like to buy portfolios, S&P 500, Nasdaq 100, EEM, etc. So then to look at a space that they would call niche and then have to select amongst 10, 20, or 30 options is really tough. And that's not how we're going to unlock, the traditional markets for this new ecosystem. So that's where I think that ReserveOne and RONE can really play a big role in bridging these two worlds. Now, in terms of the market, where do you want to start?
I can tell you, we did not leave the office on Friday expecting that tariff tweet to kick off what it kicked off. We did have a heads up because we were watching that short trade come on before the tweet. So we knew something was going to happen. We didn't know obviously the extent of it, but a very, very active and busy weekend for everyone in the space. And then again, Monday was a holiday here in the US as well as Canada. I'm Canadian. And we're still seeing the settling in and the fallout of this weekend's contagion, which was the largest wipeout we've seen in crypto, which says a lot considering we went through FTX and we went through COVID, and this weekend was a big one.
Yeah, so just to add to that, just for those that missed it, if that's possible, but there was when Trump last week did have a message about China and raising tariffs to 100% to combat the rare earth ban, and that kicked off a risk-off phase for crypto, which basically had the major cryptos under pressure, and then there was a lot of pressure in the alts. And that led to cascading liquidations. But this was largely an offshore leverage situation. If you listen to a bunch of the U.S.-based managers that are generally long spot, it was a lot of volatility, but not really an issue. But if you were doing recursive loops and creative things in DeFi, it could have been a really bad outcome. In sum total, at least $19 billion liquidation. So they had to reset the chart, right? And so then the question is, what are we seeing now? And I think what we're seeing now is what you tend to see after any major market issue is there's this initial drawdown, this initial event, right? And then afterwards, there is a little bit of a bounce. But then there's a concern that there may be losses, there may be bad debt, there may be some kind of look through to other entities, and so people tend to de-risk just in advance of that, to just take risk off the table and just wait to see if there are any issues. So far, there's been no notable issues that we've been able to see. In contrast to what you'd see in TradFi, some of the players that were involved, some of the exchanges have been very proactive in providing significant refunds to investors that they think may have been harmed. That's the type of thing you don't actually see in TradFi that frequently. No one gets refunded inside of a week if something didn't go quite right. Take a look at the LME and nickel from 2022 for an example. I think AQR is still suing them. So look, it was.
And I think Binance has refunded over 300 million.
Yeah, I think it's up to 400. So I think we don't still know the full extent of what actually occurred and who may be damaged from it. But in general, this was very much an offshore leverage issue, more for retail traders. Institutionally, I haven't seen anything really notable so far.
And I would say more for sophisticated retail traders.
Yeah. And there were some unique elements here that were hard to anticipate. So for example, one was the depeg of a particular stable coin that didn't actually depeg, but it traded through liquidity on one particular exchange, and there were pricing mechanisms connected to that created some issues. One other interesting dynamic was the effect of ADL, or auto deleveraging, that was unanticipated. So for example, say you were short a perpetual future on hyperliquid, but long spot somewhere else, right? It could be the case that you had a market neutral position, right? But because your winner was winning so big that hyperliquid had to kick in ADL to protect the overall exchange, to shrink basically the volumes on the exchange, that knocked you out of your winning position, and then you became beta one long Bitcoin with no hedge in the midst of a falling market, right? So we've heard that has been an issue for certain players, and I think like everything, stress reveals bad design, bad decisions, right? If you had positions on one exchange and another exchange, and you assumed that they would behave the same, and they didn't, that could have created an issue for you.
Yeah.
I mean, at one point, Bitcoin almost touched down to 100K, and we know that BlackRock stepped in and accumulated something like 45,000 at an average price of 105. So a good buying opportunity for institutions that were paying attention and bought the proverbial dip, and certainly led to Bitcoin coming back to support levels like pricing that was here 2 weeks ago. So really resilient response from the larger chains for sure.
We got Avi with us too. The points you were just making. Does this show that there's a level of maturity, do you feel like, with the entire asset class? Like, if you're able to go through an event like that and you see the effects of someone like on Hyperliquid, where, the average retail trader can do 40x leverage on Bitcoin, and they can also short it, and they can also go, leverage on a lot of altcoins.
They can, but should they?
Yeah, but should they? You're giving them the choice. It's at least in this example, do you feel like this has brought maturity to the market, which leads us, somewhat to what you guys focus on, is like, hey, let's bring on, more professional seasoned experience to providing, I think, large institutional buyers access to the entire market?
I would just suggest that crypto is a truly free market. And because of that, we can see higher volatility, right? Because there's no central bank to step in here and make no volatility. And there's no, and we basically can find our problems faster. So think about what crypto has done from 2020 to 2025 in terms of how it operates, right? It's gone through multiple cycles and learned so much very quickly. TradFi just doesn't iterate that fast, right? So are we fully mature? No, but are we on a much faster line of progression in this industry? 100%, right? There's lots of conversation happening this week about, okay, how should our price oracle behave? What should we be looking at, right? And you're seeing social pressure to make changes, and those changes are being made in real time. That's very different than a regulator noticing or not noticing and then putting pressure on some people, but not all the people. I think that the ability for crypto to innovate and iterate really quickly is pretty unique. So are we fully mature? No. I mean, we had probably deleveraging over last weekend that, if we had a different sort of setup, would not have happened, right? But are we able to learn from that really quickly? Sure. So where does that put crypto in a year from now? Probably well ahead of most TradFi systems.
And if you think about, the blow up of the peak of the last cycle, unfortunately, what came out of that were a lot of bad actors that were involved, whereas this was structural. And if you look at what the exchanges have done to kind of step in and refund, it's quite the opposite. We're seeing the industry behaving in a really positive and consumer friendly way, and acting like very strong, good actors.
I'll jump in. Sorry for being late.
I'll let you get in there, Avi.
I had a kid to tend to, and I said, "Is it rude to come in late?" And he said, "Better late than never." So here I am. But not sure what you guys have touched on yet, Jody. So I don't want to backtrack and double take here. But have you guys touched on the conversations? I know it just happened here with Trump. If he said anything major for the markets on a macro scale. I know a lot of it was on healthcare, and at least the first portion I saw. But and if you guys did not catch it, you can say no comment. Fair enough. It just happened.
I didn't catch it. I have been locked in.
The only thing I've seen today is that, well, there's a lot of things happened, but I saw that Trump was saying that he was going to meet with Putin soon to end the war in Ukraine. That would be, if that happens, which I presume that it will, and he can actually make progress and possibly end 2 wars in 2 weeks, right? That would be a big deal. Number one. Number two, specifically the Ukraine, that would be bearish oil, right? Bearish oil is good for the U.S. economy. It's good for inflation expectations. It's good for the ability of central bankers to cut rates, and that is good for Bitcoin. Now, are we pricing in today? No. Gold's up and Bitcoin's down, right? I think crypto is generally down. We think principally because of continued deleveraging and people taking risk off after the events we had over Friday night and Saturday.
And I do think the shutdown continues to put pressure everywhere. There's no end in sight from what we're hearing of the shutdown right now. And that clogs a lot of systems, right? It clogs, obviously the airports get a lot of headlines, but it also clogs up the SEC. It clogs up the ability for markets to move, and, small businesses start to feel pressure that can have longer term impact. So I think that's weighing heavily on the markets as well. And maybe it's hard to see the signal from the noise a bit.
Yeah, and Avi, one of the things I mentioned before we got started was it's not specifically Trump, but macro-wise, there's been a little bit more concern about credit risk in the U.S. There's this fallout from a company called First Brands, which is in the auto parts space. But I think there's more concern there in general around business being tougher and some more credit risk in the space.
Makes sense.
Speaking of gold, what are you guys' thoughts on just the decoupling of, Bitcoin or, any of these assets that are finite in supply and, it's been seen as this like debasement trade, but gold's really taken this huge front running lead. Silver's following, palladium's following. So you would wish that Bitcoin could follow in those tracks. Do you think it's just being an early market that has these high leverage, positions applied to it? It's trading just, very different within a mature asset like gold. And that's causing this gap between performance.
Yeah, so I don't like to get predictive or certainly not say anything that might be construed as investment advice.
Not financial advice.
Financial advice. This feels bullish for Bitcoin. It feels like people are going to the ones that are to the hedges that they know the best, that they're most comfortable with. But eventually, I think they'll start looking for other places, and maybe people that hadn't done the work around Bitcoin will start to do the work. And my view is Bitcoin probably has room to move from here, to almost as a catch up to what we've seen from the OG hedge assets.
Now, I just add on that right before, so in my prior role at Coinbase Asset Management, we would work with sovereign wealth funds and pension funds in and around their thoughts on crypto. And we actually wrote a paper around the idea of adding a store of value allocation to a pension fund, right? Now that store of value allocation had both gold and Bitcoin, right? Why? Just because of what you said, Jody. These are limited supply. I mean, in fact, Bitcoin is more limited for obvious reasons than gold. But both of these are quite limited supply assets, and also they have relatively low correlation with each other. Actually, I put out a post out today on the relatively, I think it's around 5% correlation between gold and Bitcoin, despite their natures being kind of similar, right? In the sense they are limited and held for being a lifeboat against fiat currencies. So we think a lot of institutions are going to, over the next few years, scale into one of these store value allocations, and maybe it's 90% gold and 10% Bitcoin, or 80% gold and 20% Bitcoin. But those allocations are likely to grow, and yeah, an environment like this seems like an opportunity. Uh-oh.
Yeah.
My kid came in screaming. If you could go, Jody.
The little one. She's just as loud as Avi. Has the same voice too.
Have her come on camera, Avi.
Yeah, I know. Well, that's why I have the
Always
fake
trouble.
background on. Sorry about that. Did you guys touch it? She just walked out. Or Jody, if you had one, go.
Yeah, no, I'm very curious. I know our audience is like, this is Treasury Talks. We talk about a lot of these public equities. They're buying Bitcoin, they're leveraging up. NAVs have been MNAVs have been compressed. There's a lot to talk about. There's preferred equities. Tell us a little bit about your process from what you can share. RONE tickers expected Q4 2025 listing that you can share just about setting up, the entity. Setting up a public company is a process, and the capital raising process, and about what the capital you have currently like on balance sheet, and then how you plan to deploy that, or expand a little bit on what you said earlier.
Yeah, so I touched on it at the top of the hour. Our capital raising was done back in the spring, and we don't actually fund until we get through the SEC and the deal is finalized. So we're not in a process right now of active allocation. But as I spoke about earlier, we've really structurally set up something that's quite different from anything else in the space. It being the only diversified debt, we will actively look to generate returns from the assets while we hold them on balance sheet. We have a venture sleeve embedded within the structure, so kind of very, very different from what you see out there. And then we've got a seasoned management team. So as you mentioned, I've already been the CEO of a public company in the space. Sebastian's talked about his background. We've got just an amazing anticipated board of directors. Wilbur Ross, former Commerce Secretary. Chin Chu, employee number 5 at Blackstone, now founder and CEO of CC Capital. Reeve Collins, one of the co-founders of Tether, Gabriel Abed, John D'Agostino. So really built out a bench of strength around the table that crosses not just legacy crypto, but Wall Street, Washington, and a long history of navigating this world, and really looking to build something that's different and scaled for growth. And so we can talk about yield.
Sure. So the portfolio, we intend to deploy the assets that we can. We have to hold some of the assets back for the convert initially, but over time we anticipate hopefully deploying all of the assets to seek yield, and that can be either lending, staking, or other ways that we think are institutional in quality that they can allow us to compound in crypto. Now we'll end up with a portfolio that is, at least initially, Bitcoin, Ethereum, Solana, ETH, Cardano, and Ripple, and then deployed. That will be our liquid portfolio. And then over time, we will draw down to build out the illiquid portfolio. And bringing those two things together, I think that really is a value proposition that's missing from the market. And to your point on setup, so a lot of the setup is building out those pipes, right? Building out those relationships. To operate, a portfolio that's deploying on the liquid side and deploying on the illiquid side, there's a lot to do, and that's a lot of phone calls, a lot of meetings, really building our integration into the system, so we can, be there when it's appropriate to provide capital and hopefully outperform our competitors.
And I think having the backgrounds you guys have and Wilbur Ross and all these names that you mentioned accelerates a lot of that, right? You mentioned the venture piece of that. I guess two things. One thing you just mentioned, so it'll be very much an active fund, if I heard you correctly. That unlike many of the DATs that are out here today, where they're holding, and it'd be kind of a shock if they did sell. Will you guys be actively watching the markets and sell Bitcoin then if it spikes real high, leverage that money then for the other arms you're saying?
Well, in general, no, we're not going to be timing the market quite like that. We will. We do have it in our documents, the ability to hedge if we are concerned about a big market fall. So it is something that we will definitely look at. Investors want to have exposure to the space, right? They want to be invested in the space. That is our job, to do it, and then to take those assets and then deploy them to seek better yield, better return than just owning the assets passively. But we do reserve the right to seek out hedges. We've been in markets for a long period of time. We've got very good information networks, and it doesn't mean that we're necessarily going to do that very often. It doesn't mean that that's necessarily a high skill type of thing. But if we are, in the markets and seeing things and we think that there is a risk, and we think that those risks are mispriced in markets, we will seek to protect the capital when we think it's appropriate.
But we won't be actively buying and selling the assets directly. So the way we're allocating even the alt sleeve is based on free float market cap with an ability to generate yield override. And once that's kind of in place, the market kind of naturally balances where those token positions are based on how they're performing from a free float perspective.
Yeah. No, I mean, it's not.
I was just thinking that's important from the tax perspective, because by holding the assets in a free float, that's more tax efficient in comparison to actively trying to time those individual assets. The hedge would be more like if we bought, say, a put spread on Bitcoin because we thought something was mispriced. Right?
Got it. And then the second to that was on the venture side of things. What types of companies are you looking at? Are you looking for early stage, or similar to the VC model? Where one of them hits, or are you looking more for free cash flowing businesses to pick up on?
So at ReserveOne, the goal is to own the upgrade overall, right? We want to own the liquid assets and make investments in the private side with the intention of owning this overall upgrade of the financial system, right? That's really important. And what that means in the VC sleeve is that thematically we want to be involved in sectors that are doing that. Then in terms of stage, in general, these will be earlier stage, so seed, Series A. But we would also say that over time the private equity element of this space is going to grow, right? For example, Kraken was doing a $500 million raise before their anticipated IPO, right? That's not something you saw back in 2021. How does that happen? Because everything is maturing, right? So what was almost exclusively a VC market, will become more of a VC and PE market over the next 3 or 4 years, and we'll participate in both. But the overarching goal here is to own the upgrade of the financial rails. So that's where we're going to be focused.
And supportive of the ecosystem. We were asked the question recently: would we invest in, something in AI that wasn't related to the digital assets? And that would be very unlikely, because that doesn't help with our overall theme and where we're trying to build and offer exposure.
Jaime, at the very beginning, we were talking about some of your experience in working on the board of a company in Canada that is a traditional mining. Yeah, traditional mining company. Tell us about it. Like, I'm not even going to spoil it. I think it's just super fascinating.
Yeah, it is so cute. It's small, it's private, it's based in Calgary, Alberta, and I think what I touched on with you is for them and the work they're doing, Bitcoin is actually their byproduct. So their primary source of revenue is from oil and gas. They own and operate oil and gas wells, and then another source of revenue for them is carbon credits, which they get by instead of gas that would otherwise be flared or mitigated in a less environmentally sensitive way, they use it to power Bitcoin mining right at the site itself, and so they're able to generate carbon credits. And then, as I mentioned, Bitcoin is the byproduct. So they're not a Bitcoin mining company; they're an oil and gas company that's leveraging Bitcoin mining to make those wells more productive and solve a carbon problem, which I just think is the greatest, one of the greatest use cases right now in Bitcoin mining. It's waste energy. It's almost negative cost energy, because by involving Bitcoin mining in the process, they're actually making and that's how their business model is able to flourish and generate outsized returns.
Yeah. Not going to steer you on where to go with the VC fund, but I do think stranded energy, stranded flare gas would be a great, fund to have, of just like, hey, who's going to, be the high risk, high reward company that pulls it off. A lot of it's political too. You got to be able to go in and make connections at all these landfills, and, but somebody's going to figure it out, and they're going to have very cheap energy.
Yeah, it's a phenomenal side of the business. Probably not. So I can say from my, that's a business that I love very much, but it's just outside of the core of what our investment thesis would be. Although I'm very, very happy to dedicate some of my personal time and attention to such a great project.
Yeah.
Go ahead.
I was going to say, Sebastian, how do you, as someone coming from traditional finance world, decide what is the upgrade to the financial system when you have companies like Bridge that was acquired by Stripe, going in and, they're saying, hey, every company can launch a stable coin using the Bridge platform. And so you have some of these traditional players like Stripe that are well-funded. They're able to come in and offer solutions that, existing companies like a Paxos or, Circle, that are like crypto native have already done. Do you feel like some of these traditional finance players are going to eat the little guys? Or do you still feel like you can innovate faster by investing in, some of the early rails?
Well, what is the upgrade? Look around. What doesn't need to be upgraded in the U.S. financial services, right? Generally speaking today, while we're in the crypto space and we can see how much better things could operate, in reality, like what is today, like actual business reality, we're still on FedWire, right? There is no stable coin. We can't move money 24/7, right? Markets are only open for stocks from 9:30 to 4 Eastern for the most part, for most people, right? We haven't really upgraded money or assets, right? And those are the two things that we're really talking about, is that money and assets get upgraded. Now, money's super important. And as you say, it's kind of rushing ahead with Genius being passed. And now we've got corp chains coming. But we look at this as basically taking finance from offline to online. So almost every part of finance has to get upgraded. So if it's money or it's assets, that's in scope, right? Now, your question around traditional firms, this is the innovator's dilemma all over again, right? Are you going to engage in the new business that's going to destroy your core business? It's very difficult for most incumbents to make those hard choices, right? And so it's we don't know, and we're looking at both sides. But in general, you usually see the innovators move faster, and they don't have the conflicts of interest, and that usually causes them to win, right? There will be some instances where that's not the case, where some really thoughtful incumbent is able to move ahead. But having worked at traditional financial institutions for most of my career, I was at CS for Credit Suisse for 12 years, I was at BlackRock for 8. I would say most institutions really are constitutionally allergic to making these hard decisions. BlackRock is actually not one of them. Like I think they are a leader because as a firm, they've always embraced change. So it's easier for them to lean into this because that's what their investors expect, and that's how their executives are compensated. But many other institutions don't work that way. You have a fiefdom, you want to hold on to your little fiefdom, and you're not likely to rip that up for an opportunity that might pay off in 5 to 10 years, right?
Well, Larry came out, was it yesterday or today, talking about the future being everything tokenized, using stable coins, which is wild. When we were Rat Boys in 18 months ago?
I made a highlight video of them going back and forth and what they said back there.
Did you?
Yeah, I had it when we were thinking of for 21 Rates, which is our business. I was thinking of just different like highlight reels to kind of showcase and just show the situation in which our generation and I guess the world's in right now. But quick question too in general.
I mean, they get it. Best performing ETF launch of all time. Better return results than anyone expected. Faster, like that. Objectively, the proof is in the pudding, and they've proven it. And so now they're really doing the work of looking around and thinking about upgrading the rails, which I think we can applaud.
In the end of the day, it's going to be easier for the legacy asset managers to get into it because in general for them it's all upside. For the banks, it's mostly downside, right? If you're a deposit taking institution, a stable coin is a life-threatening event for your firm, right? It could, at minimum, increase the cost of financing, right? And crush your NIMs or your net interest margins. That's very bad. It could substantially just decrease the level of funding, right? Because do you want to be at a bank where you get 0%, where you get nothing for your checking, the money is only kind of really around Monday through Friday, and it's a fractional reserve, and if something goes wrong, then you're in line, or your bank gets bought by JP Morgan or whomever, right? Or you could be over at a like a Coinbase or another firm where you have a stable coin. It pays you 4%, give or take. It's 24/7 money, and it's fully reserved, right? And regulated by the Fed. Well, if it's arguably safer and more functional and pays you more, as soon as we get stablecoin acceptance, which is going to happen real fast, then we have a very clear risk of a deposit flight from traditional banks to stablecoins. Because if it's faster, cheaper, and safer, right? Why wouldn't you do that? The only reason is acceptance, and if acceptance goes away, then I think stablecoins is just rolling downhill real fast, and it runs over the banks in the process.
How fast do you think? Because I think us, right, like the folks that are in the space and even people that are in technology, right, they'll pick up on this thing fast. They Venmo their friends, middle America though, is that, something?
Venmo? Hold on. Avi, I want you to pull up your Venmo right now on the podcast. Have you, like have you moved your deposits into PYUSD?
No.
Because it took me, and I'm not making this up, less than a minute to take my Venmo balances and move it into PYUSD, getting paid 4%. Now, by the way, if you have so if you pull up your Venmo and anyone,
Not financial advice though.
no,
Avi
listen,
didn't have a balance in there anyway, so
I had $60, but I'm making 4% on my $60. And anyone's on the podcast, please, who's listening live, please pull this up, and also pull up PYUSD's market cap, excluding the $300 trillion fat finger from yesterday. but before the $300 trillion fat finger from yesterday, PYUSD's market cap had actually doubled in the last month or so, right? And part of the reason, I think, is because they just made it so easy for, you were saying your friends in Ohio. Where are Midwest friends here?
I'm from Minnesota, so we'll use Minnesota.
So in Minnesota, everybody who has Venmo can now have a stablecoin. I believe that PYUSD is available there because it's national law. Geniuses, right? And so did I have to figure out a seed phrase and like do all these? No, it was literally 2 clicks. Like boom, boom, done. And I think that is the breakthrough that you need for adoption. Like when the adoption is actually not me handling a wallet, but my existing financial account has now plugged in stablecoin infrastructure underneath, and all I need to do is press a couple buttons, and now I make 4% instead of 0. Why am I not going to do that? Why is not everyone going to do that? Right?
Well, I don't have Venmo in Canada.
Venmo is one of the reasons
if Venmo's listening, can you please come to Canada?
We are an American company.
Yeah. I've been on Venmo since I think 2010, and I had a hat, and my wife thought I owned Venmo when she first met me. So tricked her real well.
Did you let her believe that for a little while?
Yeah, I think for like 30 seconds, and I was like, "This is insane." What was now I'm throwing? Oh, I guess the one question I had overall for you guys, and you guys coming from the TradFi space, what advantages? Excuse me. What advantages do you have, and what maybe disadvantages do you guys have from folks that are maybe more integrated into the space? You know, are Bitcoin maxis forever, have been involved in the Bitcoin ecosystem. What advantages and disadvantages would you say you had on some of maybe the other treasury companies that are more Bitcoin native, I guess?
Yeah, I mean, I think we're not maxis. You guys may recall at Hut we were predominantly a Bitcoin miner, but there was a point in time where we also mined ETH, and that was kind of part of our transition into HPC and GPUs. But I think we're actually building for a target audience that isn't in the crypto ecosystem today. We're building for a demographic that is probably a little bit older. They're probably just starting to take a look at crypto. They want something that gives them exposure, but in a way that they trust the people behind it. It's a vehicle that they're already comfortable with. In our case, we think an equity, a company, a publicly traded equity that can go into their traditional portfolio or 401k. That's who we're building for. We're not building for the sophisticated existing crypto investor, because they don't need us to construct a portfolio and manage it for them if they're comfortable enough to be doing leverage trading on Hyperliquid, or they want their MetaMask wallet. That is not our target audience from an investor perspective. And so I think that's what's really important about how we build the brand, who we're talking to, how we're talking to them. It's just fundamentally different from anything else in the space.
And I would say, even though I'm wearing a tie and a suit, I was part of One River Digital. We were in the space in 2021. Obviously, Jamie's was part of Hut 8 for quite some time. So we've been in it for a while. And I do think our experience, she was a public company CEO. I worked at a registered investment advisor, and I was also a commodity pool operator. Those are 2 regulated entities, right? I mentioned that because our combined experience, I think, is a substantial advantage relative to our peers when I look at the world that we're entering, right? This is the first institutional cycle for digital assets. We're getting real adoption, but real adoption means real rules, right? And I think that we are uniquely positioned to, well, at least relative to some of our peers, I think we're in a good position to invest and to build in the world that we're heading into, right?
Right.
Which is a different world than we were in 3 or 4 years ago, right?
Even last year.
Yeah.
If we didn't have the regulatory environment that we have in the United States right now, which is giving us the Genius Act, hopefully we see market structure get codified, if not later this year, early next year. This is a different world than we've ever seen before. And it's one where I think we're truly ready for this bridging, for this institutionalization of the space that we were not ready for in the absence of a supportive regulatory environment or clarity.
And just for example, so clarity, even with all the noise, most people still expect it to get passed earlier next year. It kind of has to get passed in some sense. If you think of stable coins as the train car, right? We've made train cars legal programmable money, right? Stable coins, it's a law of the land. The Genius makes stable coins legal programmable money, right? Okay, but what does this train car roll on? ETH, Solana, Tron. What are the rules for that? Oh, we haven't figured those out yet. Well, no, we have. It's clarity. We just haven't passed them, right? It can't really be that we pass Genius if we don't go and eventually pass clarity, because then it's really kind of inconsistent. How can we have money that moves on digital rails, but we haven't codified like what's a commodity, what's a security, and how should these things be treated, right? So we think it's kind of it's kind of inevitable that will be passed, and I think that Senator Cory Booker being put in charge of Senate Agricultural Committee, which is in charge of the CFTC, that's great, because now you have someone who's motivated to go and get the Senate Ag Committee to execute on clarity. And it's actually much more bipartisan today, the idea of kind of getting clear rules of the road for what's a security and what's commodity and how should they be regulated. And that's good. And back to your question about how does that position us well? We do think that will imply more regulation for digital asset treasuries, which most of them are not ready for, probably. It's likely the case that every single digital asset treasury will have to become a commodity pool operator or a CPO. That's fine. I've worked in a CPO before. I know what that's like. But that's not that common, probably, in terms of that type of experience is probably not that common. And it was probably something that a lot of people didn't anticipate. So we're built, I think, for the world we're headed into, and we're excited about it.
That's fascinating. On the CPO side, that's not something I'm that familiar with. At that point, does that become something where they're not going to be able to command a premium? Just like there's the whole debate of, who outside of, the top, DATs or Bitcoin treasury companies like Strategy can really do preferred stocks and like raise capital without just being dilutive. Do you guys think about that of like, hey, here's how we're going to going forward plan to outperform just like the net asset value of what we're holding?
I think Strategy is a great example. Saylor's always been adamant that he would not put the assets to work. So their only way to grow and to offer an option for yields to their customers is through the pref structure. And I think a lot of the DATs that we've seen come out over the last few months have come out as a single asset with an intention to be passive. I would be concerned that they could have underestimated the cost and complexity of running a public company. And so without a strategy to generate returns or generate revenues, you still have those costs. And if you're entirely dependent on dilution, for those of us that have been around a long time, the market's not always open. Capital isn't just always available like it is at this point in the cycle. So I do worry about some of the structures for some of these new people, particularly if they're set up to be passive and really just hoping to get a premium based on the underlying, which obviously has not played out over the past few weeks in many of the cases.
I'll just add, look, we think there's value to add on the asset side, right? To taking the assets and deploying them. And we're pretty excited about the opportunities there. And we think that's an area where we can differentiate ourselves.
And having the opportunity for, you know, the venture allocation, I think is going to be increasingly. I saw the baby this time.
Bring her on.
It's going to be I think increasingly of interest and important.
That's obvious early stage investment.
Yeah. Well, I was gonna say you guys piqued your interest. She wanted to hear more. Jody, I missed the first few questions when we were on here, so I don't know anything you guys that we didn't touch on, I guess, that you think it's important for our audience to understand.
You know, I think the future value of diversification is probably misunderstood in crypto, right? So right now, if you look at how Bitcoin, Ethereum, Solana, et cetera, all trade, we're still very highly correlated, right? And so, you know, if you're just looking at this space from the outside looking in, you say, well, I don't know, ETH and Bitcoin are like 80% correlated. I'll just buy one. And that's, if you're running a book of 100 equity names, that's maybe how you think about it, right? But we're headed into a really interesting world here, where now we've had our like ChatGPT moment with stable coins, right? That's a big deal for Ethereum, for Solana, and others. And the underlying drivers of token performance are probably highly likely to diverge, right? So what drives Bitcoin may be something that doesn't quite drive Ethereum or Solana, and what drives Ethereum and Solana probably has less and less of an impact on Bitcoin, right? So then if you have a portfolio that has all these assets in it, the forward-looking expectation for like the value of diversification actually goes up because these things are less correlated. And so then they actually have more portfolio value to each other. So we're kind of long, in a sense, like at the corporate level, we're long by being long diversification, we're kind of long this idea that as crypto graduates to being more important to the overall economic like drivers of the economy, like the drivers of these tokens are going to change, and that a portfolio might actually drive a higher Sharpe ratio than any one particular asset. And so the idea of diversification is going to probably be something people want more of in the future, because right now you have maxis. They want one thing and that's it, right? I think I think we're entering a world where it's going to become much more obvious that, oh, well, if you want exposure to stablecoins, maybe you want Ethereum and Solana. Well, if you really want to be exposed to the debasement trade, well, you probably want to have Bitcoin. You know, and I think that sort of conversation with investors is going to lean people towards diversification more generally, which is not really discussed in the space right now.
Well, because we're the only one. So we're the only ones talking about it.
That's fair. That's fair. But you know, it's funny. Like back at BlackRock, we had a hedge fund. We were long 3,600 stocks and short 3,600 stocks, right? At any one point in time. And so the idea of running something that has like you can only do one thing, right? To me, you know, that strikes me as I mean, it might work out, and I understand it. But you know, if we're going to bring in the next kind of wave of capital into the space, we really need to build for how they think about markets and where we think this world is going. And those things actually collide with a diversified portfolio.
Well, also with the attention, I think we talked about this a week ago or two, where the markets have changed, and I'm sure you guys can talk to this much better than I can as a retail investor. But even since I've been investing, it feels like with Twitter, with Trump being president, like him speaking at 3 p.m., like everyone's at their desk watching, right? It's very much like an attention market. And so to your point, I think I agree there that, you know, Ethereum, if it starts picking up like tech stocks would have, you know, it does provide a diversification and another opportunity for like increased yield if Bitcoin, you know, kind of does the stair stepping that a lot of people are talking about too. So yeah, very interesting.
Yeah, I think the alts are going to have an interesting season once we get clarity, because Bitcoin broadly, it's a commodity. We've got ETFs. Like it has maturity in a way that I think the rest of the space still lags. And so just another reason I think having exposure to the alts as we get codification of market structure through is makes sense.
The only other thing I bring up, I think is a very interesting theme, and you see it, you're starting to see more of it is just this idea that we have to bring simplicity to crypto for crypto to really get adopted, right? Like Venmo turning on the PayPal stablecoin with 2 clicks, no seed phrases, no complexity. That's a sign, right? Another sign is Figure going public, right? So Figure Lending is the #1 issuer of home equity lines of credit in the United States of America, right? Like if you today want a home loan from them, you can apply and you can have cash in your bank in 48 hours. Okay. Now, how can they do that? Partly because they're leveraging blockchain to make it happen. And do you have to deal with wallets? No, none of that. Right? Do the investors who buy your loan have to have wallets? No, none of that. They're abstracting away all of the complexity for the individual users so that you get the efficiency. And that is really important. I look at what we're doing here as similar. Like we're trying to deliver simplicity to something that is underlying quite complex, obviously, right? But the goal of this is very simple. We want to own the upgrade at ReserveOne. Like that's super important. And that's and I think for investors, like if we can deliver on simplicity, that's where the unlock is. And you're seeing with Venmo, you're seeing with Figure, and hopefully we continue to build, and we'll hopefully make it happen for people in our name.
So what's the best way to follow you guys? Like what's next? I know at Q4, you're looking for the listing, but
well, it depends how long the government shut down. So timelines are really tough until we get the government back to work because we need the SEC moving files forward. ReserveOne is our ticker. Sebastian and I are on all socials. I'm the only Jaime Leverton, spelled Jaime, on the planet, so I'm really easy to find across all channels. I always get my own name, and we're super happy to spend time with investors to answer any questions. We want to make ourselves particularly accessible as we go on this journey. So absolutely, any viewers that want to reach out through any channel, please don't hesitate.
Amazing. We'll also tag you guys in our Twitter and other socials we have. But very exciting. I think what you guys are building is very smart. You guys obviously have the veteran presence and aptitude, network, and everything to make this happen. So excited to watch the journey. All we ask is like when you guys do get super, super big, come back on the show. Don't think you're too big for us, and we'll do it from there. So appreciate you guys coming on.
We are very humble people. We'll always come back for our friends.
I love it. Love it. Well, enjoy and best of luck. We'll keep in touch and we'll bring you guys back.
Yeah. Awesome. Thanks again, guys. Great to see you.
Okay. Thanks so much.